Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Buenos dias. Welcome to Cut to the Chase. This is Daniel Lam, your host for this podcast. So, besides very interested in chess, I'm also a very much a top league movie buff. 2 weeks ago, I finally managed to see the latest Batman movie. You know, the one with Robert Pattinson, right? The reason why I've just seen it is because the Hong Kong cinemas were shut down the first 4 months this year due to Omicron. And Batman has always been my favorite superhero. And apologies for the spoilers ahead. One of the most powerful scenes in the movie was how the Riddler told Batman that why did the two of them get treated so differently when they were both orphans. Now, linking it back to the financial market, this week there were 2 sets of retail sales numbers from 2 heavyweight countries. But not all retail sales numbers were treated equally. So the US retail sales numbers last night fared much better than the Chinese retail sales numbers that came out on Monday. So the Chinese retail sales numbers were pretty terrible. They were well below expectations. But the US retail sales for July was flat versus an estimated 0.1% gain. And excluding autos, sales actually rose by 40 bips against expectations for no gain. So what is the relevance of these retail numbers to you, the investors? Well, we are likely to see US assets continue to outperform in the short term. So S&P 500 index has already broken above key resistance at 4,200, and it may challenge the next resistance at 4,600. If you look at the volume in the markets, they have been rising and strong, suggesting that investors are gearing up to the upside. Now, in terms of focus area in US equities, I mentioned to you the relevance of US financial sector. And you know what? It's not too late to get involved at all. We are seeing further tailwind to this idea since I first mentioned it to you this Monday. First of all, we're seeing further evidence of growth holding up well from the retail sales numbers last night. And overnight, don't forget, there was also the FOMC Minutes that show that the Fed is aware that there could be risk of over-tightening, suggesting that they may be slowing the pace of policy rate increase in the future. This means that we could get a potential yield curve re-steepening, which improves interest rate margins, as banks typically borrow short-term and lend money out long-term. Also, if you look at the earnings results from Q2, trading revenues have been healthy due to good activities in the financial markets. As a reminder, SCB is overweight the global financial sector, and especially that in the US. Now, on the other hand, Hong Kong China equities have been lackluster after the poor retail sales data, as well as the rate cut by PBOC. Seems that the Hang Seng Index is likely to be trading around the 20,000 mark in the near term and require further catalysts in order to catch up in performance, such as better data or more stimulus from the government. That's all from me today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.